We're once again at that time of the quarter again. Mark your calendars Friday, September 6th after market hours, and it's another opportunity for one of the biggest potential catalysts in Palantir's history as a company. But will S&P index inclusion actually happen, and does it even matter? Now let's get to the facts first out of the way. Rebalancing this quarter will take place on Friday, September 20th, but the actual announcement of the swapping of companies will take place earlier in the month, like I mentioned, on Friday, September 6th. For a quick refresh, last quarter on June 6th, we learned that Palantir did not make it in once again, but instead, KKR, CrowdStrike, who experienced that publicly embarrassing outage as well recently, and GoDaddy joined, while basically demoting Robert Half, Comerica, and Illumina from their spots in the index. Now, my thoughts on the whole thing with Palantir and the index, and maybe even the stock here, but let me know quick first in the comments below if you think this quarter is it, or will they be denied once again? Now, sorry to burst any bubbles first too, and no one knows for sure, at least that they could legally disclose, if Palantir will be included in this quarterly rebalance round. But over the course of just one quarter, and it went by really fast, it seems that the tides have turned for the good, at least attention-wise, to the company, their reputation, and their stock, especially right after the latest earnings results. Now, for sure, at an earnings and financial level, Palantir leaves no doubt around their continued financial results to hit that criteria. GAAP profitability is still expanding with no whiff of any danger, especially around the nature of their business too as a software company. And that's of course naturally with how they recognize revenue from their contracts. So for SaaS, you don't just sign a deal and get all that money up front and then recognize all that revenue. As noted, Palantir will recognize this over the contractual period, and even notes too the risk there that if there's a drop in deal making one quarter, you won't necessarily see the effects immediately in that exact quarter. But then later down the line, future quarters will feel that. Essentially, there's a level of predictableness to their business or foresight at the very least. But more interestingly to me, since the last quarter, Palantir continues to be building up that reputational side of things. Now, of course, it could just be the hot thing to talk about, but for example, just this week, the mainstream media's faced for finance, CNBC, how Palantir is literally the best current AI offering on the market, and that is actually helping companies today implement and operationalize AI. And also being basically backed up too by Forrester, who ranked them with the best current offering and adds to it. And even noting too the revenue dependence away from government with continue to grow their commercial business, which I think is actually favorable for any brownie points to the board. Because they're diversifying their customer base, and yeah, it's not some consumer product where everyone knows about it, but it weakens that argument of being a secretive organization. Plus, they show a robustness to their ability to expand their business and move their products around from industry to industry. And as noted too, being a mainstream name helps a little bit also, I'd say, for the index. Not only do you represent the financial prominence of the United States, which is of course a big thing, and making a boatload of money and being valued highly certainly doesn't hurt, but you can also say you represent the face of business and public companies and are representing the way we want to view our economy. Now, it's up to the board to see if Palantir should be a part of that and if that aligns with them, but you get what I'm saying here. Now, the stock, and this conversation comes up every time, of course, and I may be a broken record, and honestly, a lot of folks bring up the argument too of them not being included is due to their low institutional ownership. Still under 40% here, as we can see, where we want to at least get to half at some point. Institutions control a ton of the capital, which more simply means money speaks. Being a place to park money as a company definitely is not only a financial thing, but also a reputational one too. People look at where their money is when things get volatile. Do institutions think your business is here to stay, or at least for the long haul? What are the risks associated with your business, and will a black swan event decimate you entirely or maybe even help you thrive? Can you get through hard economic times and maintain your business without being at the whims of wild swings? Obviously, money will do as it pleases and flows to the opportunities, but underestimating the power of institutions to prop up zombies or dying dinosaurs going extinct certainly isn't far from history. I'm not one to toy with the powers that be, and honestly, if I just saw a huge jump in institutional ownership for Palantir, I would think someone knows something ahead of time. And I'm just being realistic here, of course, and how most common people would just view that. So institutions are still an important part of the equation for S&P inclusion, even if it's not officially on the checklist just because of the sheer amount of money they have. Now, other factors briefly too that would have institutions at least raise their eyebrows a little bit and be a little bit more inclined to park money in Palantir. And this is besides the S&P criteria of their income side of things that I mentioned earlier. The balance sheet first is still very pristine. They aren't beholden to large amounts of debt. Their cash pile is $4 billion, and they're getting a decent return with the low risk from the treasuries that they're in, while they still figure out what to do with that pile of money. Now, you can complain that they're not getting the most out of that money there now. However, it's still prudent for them to at least have it and not just spend it all willy-nilly. These are all good, but then the conversation will naturally swing to dilution now. Are institutions going to buy a company and slowly get a smaller piece of the pie over time and be happy with that? Well, probably not. Will there be a stabilization of the stock-based compensation, at least to the level that's acceptable to them and attractive to quote-unquote smart money? That remains to be seen still. But we know at least symbolically, Palantir has continued to put drips of some small amounts of money to buy back shares recently, and honestly, I see it as playing the long game with motivating your team, and once you get a ton of progress, that's when you start the buyback program more heavily. But we'll see how the story progresses over time. But the other big conversation too with the stock is what will happen to the price. And always interested to see what everyone's prediction is. What would happen to the stock when they do eventually get in? Let me know below. And I certainly seriously don't know, to be honest here, what to expect. The surface level answer is pretty simple. Demand will artificially need to go up. So anyone with index products need to have some level of holding Palantir. Therefore, there's going to be buying and the price will go up. This may be too simplistic, but sometimes that's the point in making things not complicated. But the flip side is that this is obviously a reality that can happen at any quarter for Palantir, so institutions are just getting ahead of it and already done loading up. And then once it actually happens, it's just a sell the news event. No one knows for sure what will happen when it's announced, especially if it's overshadowed by, say, other macro events happening. But we know at least historically, S&P inclusion brings a level of stability to a company's stock. Not saying it will maintain the valuation it has today of 70 billion, but the stability in volatile swings, knowing there has to be a level of ownership from a part of the index there because they need to have those index products, and that of course helps alleviate some of that. So the long-term wise, this event shouldn't be the one reason you want to buy or hold Palantir. It's going to be a byproduct of them being a good company regardless. And this is not investing advice, of course. This event is another clue for those who are looking at it as a prospective buyer, of course, and maybe if you own it here, and confirmation and risk off event for those. If you're planning to hold a company for several years or even a decade, taking several quarters to get added versus the next one coming up right now really seems like a tiny blip if looking in the rearview mirror over that long period of time. And honestly, if I wasn't covering the company so closely too for making videos, this would be a no sweat event. Maybe I'll look at it once in a while, but it will happen when it happens as long as that they keep this up. But I'll leave it up to you on the level of closeness you care about S&P inclusion for Palantir. But what are your thoughts though below? And I'll see you in the next video.